To watch the news here on Rise News. Now to some business news. Markets are reacting to Nigeria's central bank's sudden announcement of halting direct sales of foreign exchange to money changes to ease pressure on the nation's currency. Now, the decision to stop the supply of $5.72 billion annually by central bank to the bureau de change, which are a key source of foreign exchange for Nigerians traveling abroad and local for businesses. Now, the central bank will also stop issuing new licenses to currency trading companies, whose number more than doubled to almost 5,500 over the past 5 years. A total of $200 million was also released to all commercial banks in the country to quell any concerns that could stoke speculation in the foreign exchange markets. Our Rise business analyst, BODE OSOSANMI, is here as we continue to look at these issues. And also joining us here in the studio is the host of a Rise Exchange, BOASON OMOFAYE. It's good to have you both today.
Thanks for having me.
Yeah.
Good afternoon.
BODE, let's start it off from BODE. And many are reacting to this announcement to stop licensing the BDCs. Is this helpful for better transparency and needed capital inflow, or any other thoughts on this particular issue?
Well, I think capital inflows is very important because at the heart of everything we're talking about is liquidity, ample supply of foreign exchange. And yes, the short answer is stopping licensing of BDCs will help to improve the transparency, because obviously the banks are much more transparent than the BDCs. But let's look at the reasons why capital isn't coming in. First is because Nigeria has the highest negative interest rate. If you look at our interest rates adjusted for inflation, it's minus 6.25. That's the highest in the region. South Africa has minus 1.4. Also a problem, but not as bad as Nigeria's, and Kenya and Ghana are positive 0.7, 5.7 positive. And where you have negative interest rates, it means that foreign investors earn lower returns. And it's going to be difficult to attract investment. The other reason are the business factors like security. And of course, the opacity of the FX regime is still seen as a problem, especially in a paradigm where the central bank tends to administer rates. Analysts have said, why can we not have one single universal rate instead of many rates? The CBN allocation rate, parallel rates, government rates for transactions, and so on. But I think things would have been much better if central bank had allowed free movement of non-export proceed FX in and out of the country, and many unencumbered foreign currencies that, there are many that earn unencumbered foreign currencies, but they are reluctant to bring them in because of all kinds of CBN restrictions. So I think that is killing liquidity, and the central bank perhaps should focus on their own FX earnings and control, and should not muscle the free funds so that there is much more liquidity. And when you kill liquidity, you see all these desperate practices which will transfer a lot of the corruption, as like we're going to see now, is going to be transferred from the BDCs to the bank tellers. The thing I must also add is bank operations, although they are going to be more transparent, you will not curb the round tripping because arbitrage and round tripping happen because of these multiple rates and the clamp down by the CBN on independent sources of FX, not because the BDCs are a special breed of financial saboteurs. So these are some of the issues that I think are pertinent here.
Okay, BOASON, let me take this to you. Bode spoke of killing liquidity and essentially, you say, nurturing desperados. Another sector, without wanting to seem alarmist, that people have said will be killed by this decision are the BDCs themselves, of which we have 5,000. And essentially, they may be turned into desperados themselves. What do you make of this?
Well, the BDCs are growing in number, and as the central bank governor said, this is the only central bank in the world that sells currencies to BDCs. It's not only this under this current administration or the central bank regime. It's been like that at least for the last 5, 6, 7, 8 central bank governors that I've covered as a business journalist. So it's always been like that. At some point, they always stop it and start it and stop it. Sometimes they cut it. It used to be about $40,000 many years ago. It was reduced to 10. It moved back to $20,000 per week. It used to be twice a week. Then it was cut down to once a week. Because we believe that we have the oil proceeds and that oil will always be there and that we're sitting on a keg of money so that we can always sell to BDCs at a discounted rate. They take it to the market. They add little or zero value in terms of what they add to it. So they took it from the central bank, take it to the street or any other, and they make huge margin in the middle. I spoke to one or two traders this morning, called it abominable profit, which the BDCs are making. If you get $20,000 at a discount rate from the central bank window, you take it to the market at 500 or 505 or 510. Aaron, you'll be making about 100 or 110 naira or so in the middle. If you multiply that by $20,000 every week, multiply that by 4 weeks in a month, multiply by 52, 53 weeks in a year, you're a multi-millionaire just running a BDC, which you just got a license, and you run a very small shop, a small chair and a table, a small standing fan, maybe. So
clearly there's a market.
So clearly the market at the bottom of the pyramid is huge for it. And it's taken us years and decades to come this far. So for us to wean ourselves away from this practice will become a little bit difficult. BDCs are big businesses in Europe and elsewhere. They are big names. They're not by the roadside corner. But you know, with kind of economy that we run, huge informal, huge money coming from the oil industry and feeding the rest of the bottom of the pyramid. So the BDCs have sort of become part of our informal financial market system, whereas the central bank would want to deal with a formalized financial system, which the banks are. And that was the initial, perhaps, the idea of the BDCs. Well, how did we get to this point? We need to unwind decades of how we get to this mess in which the BDCs now become so indispensable that as if our lives depend on it. If we don't have BDCs, then we're all going to drop dead. I don't think so. We will not drop dead. And that I can assure you. Nigeria will not drop dead because we don't have BDCs, or that the numbers of BDCs are reduced significantly. But then the flip side of it is that the banks and the I&E window, which the central bank created just after 2016 contraction, will now have to function properly. And then we've had all these issues from the World Bank, from the IMF, that we need to streamline our exchange rates, the various rates and the windows, maybe now from 4 or 5 to just about 2. So it becomes easy for investors, like BODE said, to be able to know what they're dealing with. Now, that will be very much good. Maybe this is the way the central bank is going, right? To make sure that the advice of the IMF, the World Bank, others are now being, and investors, their concerns that you have too many rates. So now the BDCs will have to go to the street, to the autonomous market to source FX. They'll have to source it at the rate that is close to the market and not at a discounted window that the central bank is giving each of them $20,000 every week.
All right, BODE. What has been the reaction so far to this particular news that came out yesterday, especially as $200 million is injected into the system to help liquidity?
Well, just like I said, markets were positive that this is a good move, especially as, like BOASON said, the BDCs are not supposed to be funded by the central banks in normal situations, and they're everywhere. But I don't see a situation where we will be applauding the demonizing of BDCs, or we don't want them to exist. I don't think that's the issue at all. And what the banks are saying, or what many of the stakeholders are saying, is that this could have been handled administratively. What I mean is reduce the supply to the BDCs and maybe over time just take it off, or even take it off immediately and just give it to the central banks without making as much force. What has happened now is there's a bit of panic. Definitely the $200 million will go a long way to manage that. I hear rates have moved to as high as 522 naira to the dollar. BOASON gave me those numbers today in the black markets. And the reaction that while CBN have already done this, they're giving the impression that BDCs are going to disappear. They're not going to disappear. I disagree with BOASON. They're going to go underground, and they're just going to be unregistered, and they're going to be dealing in the bathrooms, in the toilets, in the corridors, and in the kitchens of housewives who want to send money to their children, and they can't get it at the bank. So the real answer is to ensure that the banks are able to have the ample supply. Some say there are going to be two scenarios. Either you have a scenario of enough supply where you can go to a bank and without much force, you get what you want. Or you have a scenario where there is a big hole. Central bank misjudges the demand. People can't get what they want. And the BDCs just quietly go deeper underground and they provide the service. Of course, that means you're going to see a huge, huge gap between the official and that rate, because the deeper it goes, the wider the differential. And one thing I must add, it's not just unifying, not just having one or two rates. You want the gap between the rates to be low, maybe not more than 5 naira or so, because if the gap is huge, 20, 30, 40,
the spread,
50
yes.
naira, you begin to have other kinds of, you begin to have these problems, and people will always do round tripping. I listen to the central bank governor and I sympathize, and I don't encourage anything illegal by any stretch. But it is natural for people to do these things. Natural is the word I would use, if the opportunity presents itself. And I think that's why markets all over the world don't bother. They just ensure that the market defines the price, and fixing and administration is discouraged.
Okay, he's actually started on the question I wanted to put to you. He's ended on the question I wanted to put to you.
Great.
To clarify 3 areas for me
Yes.
and for those watching. Other countries have BDCs. How do
Yes.
they manage them?
Yes.
And then also this talk of round tripping. Explain how it works in practice. And then the BDCs, there was an article I read that seemed to suggest that BDCs and the parallel market were somehow in cahoots. Because in 2016, when they did something similar,
Yes.
they noticed that when they stifled the BDCs, also the parallel market dropped in inflow. So
Yes.
they're suggesting that they were both working together. Just speak on
Well,
those
the
things.
difference between the BDCs and the parallel markets, or what the black market is like, this difference between 6 and half a dozen.
Okay.
If you know what the difference is, you tell me. But again, they're close to the bottom of the pyramid where the real demand is. But the question is, who's making the demand and who wants it?
Yeah, so how do other countries work out
so you
there?
have liquidity. Again, it goes back to the structure of your economy. And I said this earlier, we have a very huge informal economy. And this had been for decades. So we had BDCs that went or created into that informal economy in a way in which the banks wear the green suit and nice suit, blue suit and all that, blue tie, and the Bureau de Change just stayed close to the man on the streets. They don't need all the effigies and all the big grammar to reach everybody speaking and the banking hall. You have the dollar, I have the naira, we exchange the rate is agreed mutually while we're standing on the street corner in a very small shop, and off we go. So it's more like, it's a dark, kind of a dark market, which we all know it exists. But again, so the structure of the economy gives you the kind of structure of the institutions that you put in. So having a very huge informal economy, then we had a very huge number of BDCs, by the way. And at a point, I was aware at least of 1 or 2 folks who came from Benin Republic to open BDCs in Nigeria and get a license.
Yeah, so
and use
they're not-
Nigerians
they're
as
not very
front. As a
regulated.
front.
They're not-
Because it looks like a free-for-all, because this is the attitude of the fiscal government authorities over the years that, look, we have the money here, everybody come and chop, to use that local parlance. And if we continue to behave in that way, in which we're very free flow with the money, in which we're selling twice a week to BDCs $40,000 many years ago. Where does the money come from? We've depleted the resources, and we're now trying to streamline everybody. It's becoming very difficult to do, and it looks like something wrong is going on. So the whole abuse that will be down there, you can imagine. Not because the BDCs are being criminalized, but look, this is the man who served me, okay? And if I can go to him to get it, I'm going to go get there and get it, because there is the big side of it. I can go on the street and exchange my $2,000, $100, $50, and you can do it anywhere you want it. But we got a problem with, structurally speaking, that's the issue here. The central bank, like Bode said, and I sympathize with every central bank. Governor Soludo, when he was the central bank governor, went and used mobile police to drag all the malams by the roadside who were selling FX and others, and just said they should hold them into detention. They all came back out after a couple of days. Look, we all knew what went back down behind the doors in terms of who went to put pressures and all of that, so you can't do this to us and what have you. So this has been going on with every regime of every central bank in one way or the other. But what has changed was that if your exchange rate was getting worse by the day, your reserves are getting worse by the day, the economy, interest rate, inflation, everything is worsening by the day, then the pressure the central bank will be on will be more than before. But again, the bigger problem which we should focus on is that we need to have the kind of restructure, the architecture of the FX market need to change from my point of view. We need to change the architecture itself and put everybody in his rightful place. That will help us to see clearly where we're going and what we need to do.
That restructured architecture involves still keeping the BDCs?
Well, if it requires it, then we can still maintain them, but under what arrangement would it be? Once you have the BDCs, you set up another rate. If you set up another set, you're going to have another set of rates. So it keeps expanding because there are too many players. In other words, between the source of the FX, which is the central bank, ALA, NNPC, and the market, you have so many middlemen. The banks are there, the dealers are there, the BDCs are there, everybody is there. So there are too many people who want to have a piece of that single piece of dollar you are holding. Right? So to that extent, the room for misbehavior, the room for malpractices, genuine or not, the room for round tripping will just be there. That's
that word, round tripping, so please go ahead.
Yeah, the round tripping. It's just a bit what you take. I'll give a particular instance. One of the oil companies in Nigeria, which is an indigenous oil company, many years ago, I think this case came up during the 2003 or so judicial panel, in which this oil company applied for about $15 million loan from Afrexim Bank. And this money was brought to Nigeria. This money was not domiciled in any account. One of the banks in Nigeria, and I won't name names, helped this particular oil company facilitate how this money went straight to the street. And it was sold and pocketed by the management and shared between the bank. They took their own commission. And the management of the oil company took their own. There was a 6-month judicial inquiry panel, which I covered. And I have the whole materials. So the whole round tripping had been there. See, it's not just about, it's not today. It's just that once there is an opportunity, and this was an oil company, of course, by the way, was listed on the stock exchange.
Wow.
So it's as big as that. So if they could take money from a DFI, so when the central bank yesterday spoke about DFIs being part of this, some DFIs are being accused and some embassies. I said, well, BOASON, it looks like this thing hadn't really gone away, because if you take in money from abroad or from whatever, and you take it down to the market and banks facilitate it. So it's not as if the banks are much more cleaner and holier than the BDCs. So don't get me wrong. It's not.
Okay, let's actually cross over to BODE again. BODE, I would like to ask a two-part question quickly. What's the impact on the rates on the short term, first of all, and also what's the impact on the naira?
Well, like I said, in the short term, we've seen this, I would say, spike in the black market from about 501, 502, 505 to 520. But on the impact on the naira, obviously, that's the longer term impact. This will depend on the supply. This is just simple economic. It's a demand supply dynamic. If indeed you have enough to put in the market, and having enough will depend on capital inflows. If you don't have enough, you're just going to have a situation where the demand will go, those who want it will have to look for where they can get it one way or the other, which is what creates the problem. If you set a system where people are free to go to whichever market they want, and to some extent you need to release the administrative structures that are a bit, I think, too onerous, which is why many don't want to come into the market, and they keep their funds or they put their funds elsewhere. One thing I must also add, nothing stops the central bank from making an example of defaulting BDCs. You can license BDCs, you don't have to fund them, they can fund themselves from the markets. You can create criteria that are quite hard or tough for them to meet, and you can monitor them. So I don't see that as an issue at all. The real issue, I think, is the supply. If you don't have supply, you will continue to have these problems. If capital doesn't come in and you don't have enough to share, then of course, any allocation of a scarce good becomes a racket. Take that from me. Whether it's a racket to the bank or a racket to the BDCs, because you have to find some way to allocate it, and some will have more influence than others. So these are some of the issues I think that are pertinent. The other thing, of course, that I must add is when you ask everybody to go to a teller at a bank to buy FX for the smallest of transactions, that could lead to a depreciation or speculation against the naira. and the statement that anyone who can't get FX should report the problem to the CBN, that requires some clarification in terms of practicality. So there are issues, and of course, we know that the BDC will lobby as always, to put political pressure to see this reverse, which is why it has been reversed several times before. So there is an opportunity, don't doubt me, but it could be a threat if the demand far outstrips supply, and given the peculiarities for tough documentation requirements, it will be a tough act for the central bank to maintain this policy.
Thank you so much, BODE OSOSANMI, Rise Business Analyst, and also BOASON OMOFAYE, who's with us in the studio. It's been a pleasure.
It's been a pleasure.